Hello everybody, welcome to another one of my investing videos. My name is Mark, and in this video I am going to show you how a little bit of technical analysis and price action can help you with your option trading, particularly if you're trading spreads like me and you're buying calls and selling calls, you're buying puts and selling puts, and with some halfway decent charting skills, you can choose good strike prices on your calls and your puts as far as selling to open your weekly calls and puts and then close them out for some profit here. And so, quick reminder, I have this is my Roth IRA. I have a position in Microsoft here. I have one call option and two put options. This is my call. It's a 105 call, expires 2021. That's a leap. And then these are my two puts. I have a 110 put and a 115 put, and those both expire in 2021. And then up here are my weeklies. I sold open a weekly 110 call, which I'm going to be rolling up very soon, as that will be expiring April the 12th. And then I have two puts. I have a 117 put and I have a 114 put, and those the 117 put expires the 12th and the 114 put expires on the 18th in the following week. Okay, now let's go ahead and go to the charts and let me show you what I'm talking about this charting. Okay, and here we go right here. This is Microsoft, and this is a 5-day chart on Microsoft, and I'm going to go ahead and move this over 1 day. And just for future reference, 1 day, if you can see those little very shaded out gray lines, that would be a day, that would be a day, and so on. So 1 day looks like that. It's the distance of those two lines right there. So let me block that out and let me move this over 1 day and let me show you what I'm talking about as far as charting. So today is April the 4th, 2019, and this would have been yesterday. And yesterday night I was looking at the chart, okay? And when you're doing technical analysis, stock's going to do one of two things. It's either going to trend up or down. And when it trends up, it goes like this, right? When it goes down like this. Usually stocks don't go up and down in straight lines. They go up and with the higher lows and the higher highs, or they go down with the lower highs and lower lows, right? Or they range. And when they're ranging, they just go like this, right? They don't stay flat. They don't go up. They're always going up and down and up and down, right? So let me block all that out. And for the past little while, and actually if we go out to a month, this is a month, Microsoft has been trending up. And we can see right there, this was its old support. Actually, let's go out to a year. And right here is really where it made its last break. And that was about a month ago. So if we go to the month chart, this is the month chart, and this is where it started trending up again, right? And again, up, down, up, and then not even really going down, and then up, and then down a little bit, and then up. And then finally, it slowed down a little bit, and then it went up, right? And this is over the last month, okay? Now, I want to look at the 5-day chart, and this is what I want to do. I want to go to yesterday. So let me move it back to yesterday. And this is what I was looking at. This is what I saw last night when I was looking at the charts. Okay, I saw Microsoft, which has been trending up until finally it hit right there. And let me clear that out and let me just draw that part right there. So right there and right there are two reference points of what look like could be a new level of support. And notice, when the stock trends up, it's always forming new levels of support. So I thought, well, maybe this was going to be another level of support. And so I was highly interested to see what Microsoft was going to do today. Was it going to break out of its highest of its latest resistance, or was it going to go back down there, and was it going to range, right? And that's what I didn't know. So today was a very highly interesting day to see what Microsoft was going to do. Was it going to keep doing this, or was it going to finally slow down and break back down? Now let's move the chart back over, and that's what happened. Okay, so, and this is today right here. This is what Microsoft did today. So Microsoft, let me erase that. Microsoft did not keep going up. This level of support did not hold. It broke back down, and then it came back up. And so now that helps me to make my decision. Now, if Microsoft would have done this, if I would have seen Microsoft continue to go up higher and higher and continue to do this, I would have sold to open another put option. And if we go to the option chain on Microsoft here, well, actually, first of all, let's look at my positions here. Okay, these are my positions, and these negatives, that's the call. We're not going to think about that right now, just the puts, okay? I have a 117 put that expires on the 12th, and that's the one I'm concerned with, okay? Now, that put option right there, if we go to the transaction, I took in $42. I opened it on the 2nd. That would have been 2 days ago, and it's worth 50, and it was worth 42. Now, back to my positions here. If Microsoft would have kept going up, okay, and we go to this chart, and it would have went up to these higher levels, then this put option would not be worth what you see now. Right now, if we look at this put, looks like it's worth $44. If Microsoft would have kept going higher up to 120 or 121, and the trend, the uptrend, would have kept continuing, then this put option would have dropped down to probably $15 or $20. I'd have to look at the delta to give you the exact answer. But if that would have happened, then I would have sold to open another put option. And the put option I would have chosen would have been the 118. And the reason why I chose the 118 is because I am well outside of any possibilities of this short-term range. Okay, so again, let me go back a day here, right there. So every night when I'm following Microsoft, every night, and I'm looking at these charts, the first thing that I look at is the latest level of support and resistance. Support is the bottom, resistance is the top or the ceiling. So that's the first thing I look at, are the latest levels of support and resistance. Okay, and then the second thing I do is I wait for the market to open, and I see if these levels of support and resistance are going to hold. So if Microsoft, like if it was still yesterday and Microsoft were to break out up higher than this, then I would have sold to open a 118, and I have the cash in my account to cover it. My cash balance right now is $24,000 whatever dollars, about $24,000, and I would have sold a 118, so I would only need $11,800 to cover that, right? And by the way, a little trick is that if I didn't have the money, then I could always just buy to open a put option, like maybe a 108 or something, and that put option would only cost me $1 or $2. If we, and actually just for interest, let's see what those puts would be worth. So let's say that I wanted to sell the 118 right now, and I wanted to sell it out there. Now, first of all, the 118s are paying pretty nice, but if Microsoft was up to 120, 121, then I'd probably get like 30 or 40 bucks, right? Now, let's look at some of these lower put options, and I'll show you what I mean. So here we go, a 108, the bid is $1, the ask is $4. So I could have easily bought to open a 108, and that is a credit put spread, by the way, with a $10 spread. So instead of having to use $11,800, I would only need $1,000. because this long put is a contract to sell Microsoft at 108. So if Microsoft did happen to break below 108, then this put option would gain in value, and I wouldn't need $11,800. I'd only need the money to cover the distance from the 108 and the 118. So that's another thing I could have do. That's another thing that you can do if you don't want to use all your cash to cover the position. But in my case, I have plenty of cash on the sidelines, and I would have just sold to open the put, depending upon what Microsoft. So again, the first thing I do is I look at the latest level of support and resistance. The second thing I do is the next day when I wake up and I'm checking the market, I see if these levels of support and resistance hold. And if Microsoft would have went higher, then I would be selling to open a 118. And again, I picked the 118 because it is well outside of its last range. And if Microsoft is going to keep trending up, then it's a very safe bet to sell these puts. Right now, I could have even sold a 119 and even get more money, but I'm very conservative with my money. I like to make safe money, and I've learned one thing I've learned about trading options is you don't have to be risky. You can be nice and safe and conservative, and you still make good money trading options, buying and selling calls and puts, particularly the weeklies, which I love. Okay, so again, first check the supports and the resistance. Two, see what the market does, see what your stock's going to do if it breaks out. And then the third thing you do is that if the trend continues, then you pick your strike price based on its latest trend. Okay, now I will leave you with this last final thought as I close out this video. When you're doing technical analysis and charting, these charts tell you what the stock is doing. They do not tell you what the stock is going to do. Okay, so don't delude yourself into thinking that you can read a chart and you can say, well, golly gee, you know, Microsoft went up or Microsoft went down. And again, let's go back to what happened today. Well, golly gee, look at this, you know, Microsoft did not, this support did not hold, right? It went back down, so therefore it's not going to ever go up. Okay, don't make that mistake. I've made that mistake a million times. And you know, charts don't tell you what stocks are going to do. They tell you what stocks are doing in a certain period of time. And they're helpful, but they're not foolproof. And that's why you got to practice good risk management. Risk management means that you cover yourself. When you go in a position, whether you're buying stocks or you're buying calls or puts, you cover yourself in one way. Okay, selling covered calls is a way of covering yourself. It's weak. It's one of the weakest ways to manage risk, but it is, in a way, risk management. A stronger way of managing risk on shares is to buy put options. That's a caller. But if you're doing spreads like me and you're buying and selling calls, then you buy calls. And actually, I'll leave you with one more thought. Okay, one more thought here, and let's go to the option chain. That if you're going to do spreads, you want to buy calls and puts that expire in like a year or 2 years. Why is that? Okay, I'll show you why. Because if we look at calls and puts that expire in 651 days, and let's just look at the 110 put. There you go right there, $110 put. The bid $955, the ask $1090. So let's say you spend $1,000 for that, and that's good for 651 days. Now let's look at a 42-day put. Okay, that's about a month and a half from now. Now you could spend, the bid is 97, the ask is 105, so you could spend $100 for a put option. Same put, right? Same strike price, 110, 110. Okay, and that $100 will get you 42 days of protection. For the next 42 days, you have the right to sell Microsoft at $110 a share. And you're thinking, golly gee, what a good deal. I'm only spending $100, right? Now, let's do the math here, okay? If you spend $1,000 and you're good all the way till January, this is April, right? So that means you're good for 21 months. Now, imagine if every 42 days you're spending $100. Okay, every 42 days. So if we're spending $1,000, that means 10 of these. If we did this 10 times, okay, that would be in 420 days. That means that if every 42 days you bought a $110 put option, you spent $100, and you did that 10 times, you would spend the same money that you're spending for this long-term put, which expires in 651 days. So right off the baseball bat, you should see, I get 420 days if I only want to spend $100, but I have to do that 10 times. Or I could buy a put option that and just cough up $1,000. Oh no, I'm spending all this money. No, you're not, because in the long run you're saving a ton of money, right? You buy this put option 10 times, and in 420 days, right, 42 times 10, you're spending the same money as if you would have spent the same $1,000, but you have a put option good for 651 days. So that's an extra, what, 230 days. That's like, what, 6, 7, 8. You get an extra 8 months of protection if you're willing to put up $1,000 right now. Now, if you want, you can save money in the short run, but not a good idea. You know, I mean, think of this as a business. It's all about cost. It's all about managing your risk, your inventory, and these puts and calls are part of your inventories, and you're going to make or lose money based on the decisions you make. And if you're a smart businessman, then you'll be buying these long puts, and you'll spend $1,000 every 651 days rather than spending $1,000 every 420 days. So that's a final thought that I want to leave you with, that when you're buying calls and puts, you want to buy long-term calls and puts and calls that expire 651 days now. And if you're going to sell to open calls and puts, then guess what? That's right, you're going to sell to open these shorter terms. And think about this, okay? If you're selling to open these weeklies and you're making $70, $80 a week or something, think of all the money that you can make. It's fabulous. Yes, it's volatile. Yes, stocks go up and down. And actually, I had a good day today. My account finally started making money. I had a nice uptick, and that's on a day that Microsoft actually went down, and that's because I have the 2 puts and the 1 call. And eventually the money does catch up, and Microsoft went down 61 cents, but my account was able to go up some money because of the 2 puts. So eventually, as I continually sell to open these weekly puts and the 1 call that I have, eventually the money does catch up. And when Microsoft finally does decide to stop going up so freaking much, and it finally starts to calm down and maybe does a little pullback, then I get some nice profit sometimes. So that's it for this video. I hope you enjoy this video. As always, if you have any questions or comments, feel free to leave anything and in the comment section, and I typically answer every single comment or feedback that I get. Thank you for watching my videos, and until the next video, I hope you have a good day, and I will see you in the next video.